The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. It's Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until 12 Eastern Time at 877-927-6648. And let me give that overseas number. It's 1727-445-1044. I'm not sure what area code you're going to put in there, but that's the number for international calls. So thank you, Steve, for 2 great hours. And, of course, today being Friday, I'm followed right after this at noon by Nico DeHaan. Paige is with him, and I always forget to mention Paige. I'm sorry, Paige. Just a great show on health and great newsletter. So shows right through the day here at TFNN and going all the way through to 6 o'clock. Please stay tuned. Of course, this is also the great silver giveaway day today, the last day. So that should be fun. Let's see. In the ChapmanWave methodology, I have a particular technique. This is the first time you're listening. The technique essentially it's an umbrella name for many other techniques within the ChapmanWave. But the core of the ChapmanWave identifies a low bar that starts what's called the buy signal. If the technicals and the pattern confirms, it should go very quickly from a buy signal to a buy mode. The moment I mention buy mode, it implies that there should be not 1, 2, or 3 successively higher peaks, but 4. It should get you to at least 4. Can it go higher? Believe me, it can go a great deal higher. Since the buy signal of March of 2006, we are now... Do you remember the headlines on the way down? Every day, banks and international this and fiscal, whatever it is. Do you see anything? Are there front page headlines? There will be this weekend because we hit 14,000. But do you understand how the press works? Do you understand the psychology behind this? Do you understand how so many people got out of the market because of all the hysteria of the headlines? I'm going to do this. I'm going to do this because I think it's absolutely important. I have a chart here, a long-term chart. I don't want that. I'm going to, you know what? I'm going to run all the numbers, and then I'm going to show you a chart, and I'm going to ask you a question. So let me write that down because I'm liable to forget. Show chart with a question mark and ask the question. All right, so let's just run the numbers. The Dow is at 13,996. It made a new high today, new recovery high of 14,003. This is the requisite leg D. Remember, I was just talking about the Chapman that should get you to at least a peak there after the most identifiable low bar. Well, the low bar was 12,883. That was made on December the 31st. And now we've got leg D. And if you look at that maroon line, that maroon, not good. Coughing already. Can't believe almost 2 weeks, and this darn flu thing hasn't gone away. Well, got that tickle in the throat. Make it a little quieter. Here we go. So the Dow went to peak C 3 days ago at 13,969.99. And when I was interviewed by Tom last night, I said, I'm expecting that if it goes 0.1 above, we will get that requisite leg D. At that point, I think we've got to be a little bit careful because we could start to see an oval formation with a very choppy up-down move for about a week or so before we can break out to the upside. The weekly chart I've got is leg B. The monthly chart closed yesterday with a powerful leg up, which I'm calling leg C. What I'd also mentioned was that if in February, even if it's the first hour or two of the trading day of February, if it makes a new recovery high, it means that I cannot get leg C, a D, in the ChapmanWave for at least 2 months. That means even if today's the high and the rest of February pulls back, As I say, it even goes down, I don't think so, 13,700, 13,500 should be very strong cushion area. But let's just say it goes underneath 13,300, the 9-period exponential moving average. You would still have the following month to start to recover. And then it's the next month that, oh, wait a minute, in March, if there's a new recovery high, it can continue the leg C up. So until you make a peak C, that is a full month with a lower high bar, the whole bar must be lower than the previous high, you do not get peak C. So the earliest we can get peaks, leg D, is if in March there is no new high, whatever February's high is, then April would give you that leg D. So this is very bullish. Doesn't mean to say you can't pull back, but it's very bullish on a monthly basis. And the weekly chart is saying, hey, if this is leg B, we've still got C and D to go. So let's just run those numbers. The S&P right now, SPX, and then we'll take calls at 877-927-6648. I missed it because I was talking at the same time. The S&P has made leg E to the upside. Yes, leg E as we are speaking. But the SPY was with the Dow. It had only made a peak E. Has the SPY made its requisite leg D? Absolutely. The SPY right now is at 151.02. The support on the SPY is 149.77. I would say all the way to 148.90 at this particular point. Let me give you the SPX, the same thing. .X. And the SPX would go down to 14... I'd say between 1497 and 1483 should be tremendous support if that oval, and I'm going to draw it in because that's the pattern that I'm anticipating, an oval pattern. Not to say we can't go a little higher, but we're getting very extended in many of the indexes. So that's that. The Qs, 1, 2, 3. The Qs, this is very interesting because it's making the pattern that makes the oval pattern. I've got an F/C as the last doji peak with it was a gap down. So there's an island reversal there. So you've got on the 23rd, 67.79. If the Qs might be tough, but if the Qs at 67.35 are able to spike to the 67.80 or higher area, that would be this oval formation that says, aha, there's the neck, and now we can expect the head and the beak to come back down into the body. But the weekly chart so far looks like it's making a peak D. And the quicker you go from peak A to B to C to D, which is what's happened since the low bar of the week of the 16th of November in the Qs, to this second doji candle from last week, and today, I don't know where it'll close, but so far the price is underneath last week's high. The MACD is at 81%, and the stochastic is okay. It's good, but it's not great. So I'm watching this because if in the next week there's this choppy motion, then 66.38 will be key support. And if the Qs go underneath it, we can expect the Qs to pull back all the way to about the 62.50s area. On the upside, well, the upside's fairly open because once it breaks to the upside, 68.30 is a possibility if it gets partly into the wick of the candle of the 19th of October. Let me just quickly go through these other things because we've got a caller waiting. I know this caller usually has to run off quickly. The GLD right now is up 32 cents at 161.52. The TLT is at 116.81. This is going to be very interesting because the TLT is right at a point with a trough F and a doji candle of having a bounce, and that would correspond to some kind of weakness that I'm looking at potential weakness coming in next week into the Dow. I'm just talking about, like give back some of this. Wow, we're up 142 points. Imagine if we just give back a couple of days of the recent move in the Dow. That just takes us back to like Wednesday. But yes, I can see some kind of choppy action here until the TLT is able to break into the candle of the 24th of January above 119.26. I can just say they're going to be rally failures, and the monthly chart absolutely looks like it's a peak D. I think I've covered a chunk of what I want to look at. Oh, just quickly, EUR USD. This is leg D, a huge leg D, and that says that if there's a pullback in the currency pair, it's on its way to the, I'm talking trend lines here, and the trend line that I drew ages ago had a trend line that goes to about 1.379 if it broke out of the left side, right side price time match, which this week it's doing by, it's beating it by 1 week. So that is positive. So there's a little more to go on the upside, but we're getting real close to some kind of consolidation. And the USD JPY is in fact at, really strong leg E in the daily, D in the weekly, and B in the monthly. So the support there would be, it's at 92.56. I suspect that between 90.90 and 90.28 will be the digestive period. We've already had an oval formation. This is like the neck, and it should come back. It should tackle the bar of the 24th of January, high of 90.546 and the low of 88.40. I don't know about the 88 part of it, but yeah, I can see some kind of pullback. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Pretty good, Doctor. How you doing, sir? I got two questions.
Yes.
About financials, and I also got a question about the NASDAQ 100. About the financials, I shorted Morgan Stanley MS at 28.85. My plan was not to add. That was the original plan. And I'm thinking about adding here and a short. And the other question, I'm going to listen online after this. Another question is, the NASDAQ 100 didn't outperform on this run here. Do you think on the next run they're going to be the outperformers? And I'll listen online, Basil.
Okay, that's a very good question, and I will do the Morgan Stanley said just one. As you're going off, you shorted at 20.80 something.
No, 22.85.
22.85. I got that. Okay. All right, fine. So I'll be talking about this right now. Folks, we're looking at Morgan Stanley. Morgan Stanley, of course, in the financial area. Let me just quickly do this monthly. I don't know. I was sure I'd done this, but anyway, it doesn't matter. So what we're looking at here is, just real quickly, A, B, C, D, and this is either E/A/A, E/A. Folks, if you're looking at Tiger TV, you'll see what I'm doing here. I am doing the notation of the ChapmanWave. I'm doing it real quickly, and I just have to check here, monthly. So that was 50, 61. That's good. That's 21. And that's 34. Great, I did that correctly. Good. Okay, so this is what I'm looking at here. Because in the weekly chart, the from the peak D, the stochastic did pull back, but the MACD fast moving average, the green line here, it deflected from above the slow moving average. This means that there could be, in fact, a continuation of the pattern. This could be E to F, but I've got E/A, F/B. So that says in the monthly, I don't have any signals right at this moment to say that there's anything weak, but there is a 200-period exponential moving average right at 23.58, and it's getting real close to that, number one. Number two is, in the daily chart, we've got E, and a number of charts. I'm going to show them in a few moments. A number of charts. This is E, F. This is going to be interesting. I will do the analysis, but I'm going to say, be real careful. Wow, this is an amazing chart. But I do believe we are close to some kind of a pullback in Morgan Stanley, but just a little bit of a pullback.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back. The Dow's up 137, S&P's up 1260, and we are looking at MS, which is Morgan Stanley for Freeman in Dallas. And I thank goodness I recognize chart patterns so well because I've done them for so long. I just knew there was something wrong with this pattern that I mislabeled it. And I went back and my eye had said there was something going on. And lo and behold, there were 2 ChapmanWave instant restarts. I don't want to get into that right now, other than to say that if you learn the ChapmanWave technique, there's a particular technique that says if you get to peak D and within 2 to 3 bars, it breaks out in a special way to a new leg up. You have a parallel wave count that should take you to at least a D, but it could even take you to an E and an F, but it could even recycle. And that's exactly what happens. It had 2 instant restarts. So this is the third one, and this third one, usually the third one, it might be able to go to an E, but when it gets to the D, it's getting really overbought. So I'm going to suggest don't add to the position. You're going to have to give it, it's a 23.41. You are short at 22.80s. My 120-minute chart and the daily are both in leg D. Right at this particular point, I don't have a single signal to say that they're about to turn, other than if by the end of the day, the Dow, instead of being up 133, and this is what I've been anticipating, my subscribers know exactly to almost the day we're getting these things. So this is critical for me. If at the end of the day, the Dow is only up 85 points, 73 points, instead of being up 157, And Morgan Stanley has started to pull back to 23.20 to maybe 23.14. All of a sudden, you've got everything going your way, because if we open down on Monday, that would say that Morgan Stanley is probably making a peak D, and then all it would do, I don't see all that much in it right now. 22.05 would be the low to watch. If it takes that out, then you're looking at the gap, and I'm sure that's what you were looking at, the gap between 21.79 on the 18th, and the 18th and the 17th was a high of 20.75. So yeah, 8% to 10%, but I don't want to risk. So don't sacrifice any potential doubling up until, if at the end of the day, Morgan Stanley gets to about 23.20, and the Dow has given up at least 50 to 60 points of what it's got now, and the S&P is at 1510. It should be closing close to the 1505 to 1503 level. That's where I would see. Otherwise, I would just have a tie stop. You're going to get a chance to get this. This, in fact, could be the perfect opportunity, but that's anticipating something that hasn't happened. I see an M formation in the fast-moving of the stochastic. Possibly it could be another day on Monday. You can believe that people who have not got into the market now are just saying, what are we to do? Where are we to go? So that's buoying the market. So I don't actually see more than about 300 points, 400 points to the downside, if there is going to be a big turnaround. But that's the way I see it. So I hope that helps you, Freeman. And let's go to Dan in North Reading. Hi, Dan. How are you? We got the echo from the computer. Oh, you just got the echo from something. Hi, Dan. Oh, and now Dan's going to say, oh, I'm here. Dan from North Reading. Turning off the computer. There is a delay. And I'm expecting at any moment to hear, hi, from Dan in North Reading. All right, I'm going to talk about, he wanted to talk about the VIX. Dan, the moment you're there, just shout out, I'm here. Dan in North Reading wants to look at the VIX index. Well, if you look at the VIX index, well, first of all, the VIX right now is at 12.87. It's that monthly chart that I'm in awe of the monthly chart. Don't forget, Dan, if you're there, just say, I'm here. VIX. Now, the VIX has turned down in the I've got black background charts. Why? Because I want to show you the monthly. Look at this month. Hi, how are you doing?
Good. Yeah, what I called to try and figure out what exactly is going on with the volatility index.
Well, as you know, I've been using the volatility index for a very, very, very long time. About a year or so ago, when we were looking at, during last year, when I was looking at the volatility index, I said the moment the volatility index breaks under 30, it was 2011, I said under 30, we can expect that it's going to help the market. It'll be buying pressure. Then I said the moment it breaks under 20, that's where we can start to get the acceleration. And I'm sticking with that because the 9-period moving average is at 16.54 in the monthly. The MACD is turning down. Stochastic is flat and it's trading now way underneath that 1654 level at 12.86 in the monthly. But we've only just begun the very first couple of hours of February. So let me put that into context, and I'm going to show you something in the 120-minute chart, which I think is valuable information. So hold on. Dan is back from North Reading. This is in Massachusetts, North Reading Beach. Is that correct? North Reading. We'll be back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. This is Basil Chapman, Tiger Technicians Hour. Dow's up 131, S&P's up 12. This is spectacular action. And we're on with Dan in North Reading, and I wanted to show something here quickly. In the 120-minute chart, which I show my subscribers every day, I give a very detailed, where is this report? I can show it to you right here. I don't know if I even have time for it. Let me just see. Is this the one or is that the one? I think this is best. This is the one. I showed that the volatility index had made a peak E at 14.43, and this is a big write-up here. And I also discussed that there was ChapmanWave Trin gauge had given a reading that said within 1 to 2 days should be between a 7 and a 9 point sudden rally to the upside, which later on fails. And that's this technique that I've got, one of the techniques that I use with Richard Arm's Trin Index. But all of this here, and then the 120-minute chart made a peak F-top. Now, is this a brand new leg A to the upside, or is it G? So I'm going to just leave that as it stands. But what I wanted to say about the volatility index, as long as it keeps giving me the correct signals within the ChapmanWave, the last one was peak D at 23.23. That was right on December the 28th. I have to say that these signals have just been fabulous, and I have to also say that until the until the volatility index, the VIX, which is at 12.85 right now, down $1.43, until it gets into that gap down area, 1593 to 1788, there's going to be buying pressure. The moment the volatility index starts to spike back, it's at 85 right now. If by Tuesday afternoon, Wednesday morning, that volatility index is starting to rally, it has to break about 1443. I'd even say 1470 and touch 15. And then I say, great, now we're starting to get that little bit of a pullback that I'm anticipating. Are you anticipating doing anything with the VIX, or is this a general question?
The point I wanted to make is I watch a daily and, like a 60 or a 120 minute. The daily stochastics got all the way up to over 90, and they seem to have just collapsed today.
The stochastic, yes. Oh, that's on the volatility index.
Yeah.
The volatility, now this is very interesting when you mentioned that. The volatility index had a very sharp spike, and if you think of it as a commensurate move with the volatility index, and it went from the, say, 5-6% area all the way to about 77, almost 80%, you have to say, wow, that was a lot of energy expended to the upside. The volatility index really should have, I'm with you, the volatility should have, it only went to a peak C and then failed. A peak C failure is very negative. So I shouldn't say failed, it's pulled back sharply. I would consider that it's failed if it even gets close to 12.40. But in the meantime, it's just pulling back. So if the volatility index spikes above 14.43, that'll be start a leg D if it happens in the next day or so in the daily. But I'm with you. I looked at that and I thought, wow, does that say we're going to actually pull back further? But look what's happened. You had the volatility index go from extremely oversold to not overbought, but into the strong area. And yet the volatility index on a percentage basis, it looks fine because it went from 12.30 to 14.43. So that's about 14%. But that's really nothing. I would say that if the volatility index was going to move, it should push into the 15s, and then I'm going to take notice. So I hope that helps you, just giving you a sense of what I'm looking at. If you're looking at my charts, look at that weekly chart. 14.59 is the 9-period exponential moving average. Let's both keep our eye on that. The moment it starts to break into the 1460s, I'm going to say, great, we've got a bit of a pullback. I want a pullback. There are stocks that I would like to buy, and there are stocks that I would like to short. So thanks so much for calling, and I really hope I answered your question.
Get a minute and take a look at the TBT for me. I appreciate it.
TBT? Did you say TBT?
TBTGE is something I'm following too. So thanks a lot.
Oh, okay. So is this the inverse of the bonds, the TBT?
Yeah, the short 20.
Yeah. Okay, I'm going to talk about that in a little while. We've got a bunch of people waiting, so I'll get to that because it's very important. But I've got that as a potential peak F right now in the TBT. So let's go to Miami. We're going to go down to Frank in Daytona Beach. Hi, Frank. How are you?
Oh, pretty good, Basil. I sat there and just recently got into EXM.
Okay,
and
EXM.
I was just wondering, yes. And I was just wondering, yeah.
That's XL, Maritime Carriers Limited?
Yes.
Okay, good. So you are in. What price did you get in at? About 0.40 something or 50?
No, I got in at 52.
Okay, and it's trading now at 56. Folks, this is one of those, the shippers, the whole bunch of shippers. There's NAT, that's Nordic American Tankers. There's Dry Ships, DRYS. And Dry Ships is actually one of the stronger ones. It's at 229 right now. So EXM is one of those that had a spectacular move. There was this great move beginning of January where it went from like 40 cents up to 75 cents. Now it's pulled back to the 46 cents area, and at this particular point it's at 56. This is my recommendation. Nibbling at a stock like this is a great thing to do. I would not get a big position. Not that it hasn't the potential to double, but because it also has, I don't have to tell you, if you've watched these close enough, they have the potential to drop really quickly.
That's why I'm curious, since you said talking about the market correction.
So if there is a bit of a market, right? So if there is a little bit, I'm not expecting that much. As I say, it's an oval formation that I'm looking at. The 13,000, somewhere between 13,750 and 13,000. Worst case would be 13,005 something. I'm not even sure we're going to get that right now, but that's what I would anticipate if we were going to get some kind of a pullback. So I think you're in at a great price. This is what I'm going to recommend. Keep this as your core. If it breaks by 1 penny over 0.62, it's trading at 0.56 right now. You might want to add just another small trading position so that you can keep your core at about 52 cents. You can keep that, have the trading position, and watch to see if it fills the gap between 0.65, the high of the 15th, and the low of the 14th, 0.67. And all I would do with the second position is I would have either you can have a trading stop, or you make the stop if you start to make money, and it moves maybe 7 cents above where you bought it. If you say nibbled, if you nibbled at 0.63, and it gets to, well, no, it doesn't. That's too small. Yeah, you need more. Well, what I would say is the second position cannot have more than a 1 or a 2 cent stop. I mean, should have a 1 to 2 cent stop, because this is a trading position, and this is the position that you would like to see it as quickly go up as it came down, and that's what you want. You want it to clear the gap and get into the 73 to 75 area quite quickly. If it does that, then your trading position can have a trading stop. Excuse me. A trading stop, and that trading stop allows you to be very comfortable with your core position. And the trading stop says, hey, if this thing can go back to the 0.76 area that it hit on the 10th, as it gets to 0.77, a new recovery high, I would tighten up the stop quite a bit on the trading position. That's how I would trade. If you've got just this one position and it starts to break 0.53, which is the low of 3 days ago, you're in at about that level. I say just watch it. It might be one of those that you just have to hang on tight, even if it breaks underneath 0.46, just because it's like, I'm almost looking at this as if 0.58 is a fulcrum, and that even if it goes down, it's coming back to 58, and even if it goes up, at some point it might come back and retest 58. So that's the area. So I don't know what you want to do as a stop on such a low price stock. It's very hard to put in a stop, because it sounds like, what's 3 cents? Well, 3 cents is, 20%. Yeah. I mean, 3-4%, right?
Yes.
So, okay, so I don't know what you want to do, but your weekly chart is the most important. This is what I'm looking at. If EXM is able in the next 2 weeks to hold the 0.45s and forget about it completely, but instead start to treat 0.65, 0.70 as its upside target, wow, the moment, if this can ever break 0.76, even intra-week, if it can do it quickly instead of this U-shaped pattern that's taken like July, August, it's taken about 4 months each time for it to get to that level. But if it's this time, it does it quickly and gets above 76. The weekly improves, the monthly improves, and all of a sudden you see you've got your core position. And your core position, you can just leave it there and say, great. And you've got your trading position that you can work around. You know what I'm saying? That
yes.
It'll be nice. And all of this should be just a small part of your whole portfolio, because it is a very risky thing. But thanks for calling, and thanks for bringing it to our attention. And a great entry point at 0.52. Let's see what happens. Thanks for calling, Frank.
Thank you. Bye-bye.
Thank you. Thank you. Let's go to Jane in Westboro, Mass. Hi, Jane. How are you?
Good, Basil. How are you?
I'm good. My biggest complaint about Westboro is that whenever I'm coming back on a Sunday afternoon from Brooklyn, when we go once a month to see my grandchildren, wow, the traffic on the turnpike on a Sunday afternoon is unbelievable.
It is, I know.
So you want to look at Apple
back on Sunday night.
Yeah, I mean, it's just it's tough. I never know when to do it, but anyway, I always say there's always an excuse. It's Tanglewood or it's whatever it is. There's always an excuse. There was once the air show. They have the air show, which I got caught in going to Tanglewood once. It was 2 hours just waiting in traffic. All right, so you wanted to look at Apple. Do you have a position?
I do. I bought it at the close yesterday. I bought a call on it. A couple of calls. So I was just wondering if it could take a little bounce here.
You know, I've been looking at this, and it was we had a very nice trade at one point when Apple plunged, and we got it in for a nice 22-point bounce on the upside. And I thought I have one subscriber who's fabulous at buying puts and calls, and he had bought calls on Apple when it was down to 440 area to just hit 435 round number. And I said, okay, expect a bounce, but just a bounce. And now we're going to do this again. Okay. This is what I'm expecting. I would not be surprised if next week, because GE needs to get leg D, it's very close. IBM is just consolidating its big gains. UTX is making some kind of a short-term top here. Triple M needs just a little bit more to get to leg D. I would not be surprised if next week turns out to be a lot choppier than everyone thinks. But I would also not be surprised if all of a sudden Apple has that little bit of strength. It has to have it. I can tell you why. Because if Apple, it's at 452. If Apple just breaks like 446, 443 one more time, I think people are just going to give up. It could go real quick to test the 435 round number. Now, this is what I'd be looking at. And you say you've just got a few calls. So this is, you understand, this is speculative, and it's the chance that Apple's going to try for the 464 9-period moving average that's been strong resistance. But this is what I would say to you. Based on my 120-minute peak A, peak B, it could fail you, 59, 60, B. Okay. Apple by Monday afternoon. No, I'm going to give it until Tuesday morning at 11 o'clock till Tuesday afternoon at 3 o'clock. If Apple is not taken out for 46. Let's call it 446. If it hasn't taken out 446, but instead is trading it's at 451 right now. If it's trading anywhere in the 455 to 457 area, my thinking here is that the MACD fast moving average of the 120-minute chart is stronger than the slow stochastic, and it's going to be a buoying allow Apple to bounce. If that bounce occurs, you want to see it take out the 459.48 area of this morning. Yeah, this morning. Look, it even tried to bounce this morning, couldn't hold it. But it's got to take that out. Now, I would do this. As it goes to each level, I would take off one of the calls, if you got a few. So 459 to somewhere around 460, definitely I would take off one. So if you got two left, I would say the next level would be 461 to 464. If it's able to get to 464 by Tuesday afternoon or Wednesday, this is a February call or a weekly call?
I know it's a February 16th.
So you have time here, but I think Apple calls and puts right now are going to shrink really quickly. The premiums that come out when it does the wrong thing. I don't even have to tell you. I bet you're looking at it and you can see it as it's happening. I bet the call from this morning is already shrinking, right?
Yes, definitely.
Okay. So I don't want you to mess around with it. It's still money, even though it's just maybe I wouldn't call it gambling, but it's your kind of risk trading part of your whole methodology. It's still it's a hazard to one's thinking to see something shrink like this. And in fact, Apple could even move to 455, and you might not get your premium until it really starts to get to 457, 459. So I'm going to recommend that as it keeps climbing, you take off one at each level. Try to keep one for a sudden spike to 467. But my guess is that it's going to be a bit of a struggle, and I'd rather see you risk opportunity than risk your premium by having it shrink completely, because if it starts to decline, it could retest the 435 level. Okay. So I hope that helps. I'll look at it again on Monday.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I want to quickly announce, before the break finishes, this is our last break of the day before Nick O'Dohan comes on with Paige, that Bruce of Boulder, Colorado is our 1 ounce, not a half ounce, but our 1 ounce winner. And congratulations, Bruce. That is fantastic. And just questioning my engineer here. So, I love that. This is the big winner of the day. The 1 ounce winner is Bruce of Boulder, Colorado. And I'm just waiting for the typing to finish. Bruce is on the phone. Hi, Bruce.
Hi, Basil.
We have a winner. Where's my backup there? There it is. Hey, bravo. Great going, Bruce. And you're a faithful listener of TFNN, right?
Oh, yeah.
Oh, yeah. That's fantastic. We've had so many people from Colorado. It is fantastic. We have a most wonderful audience out there. And good feeling, huh?
Oh, yeah. Yeah, it's great. Thank you.
It's a wonderful, it's our reward to you, and thank you for listening. And Great Panther Silver and TFN put together this fabulous giveaway, and you are the winner. Do you have a stock that you would like to ask about?
No, not right now.
All right. Well, I think being able to congratulate you on winning silver at this particular time is fabulous. So have a great weekend, and thank you for entering, and congratulations on winning.
All right. Thank you, Basil, and I appreciate all the great advice you guys hand out.
Thank you very much, and have a good weekend.
Thanks. You too.
Thank you. So, folks, in this remaining time, let me just quickly do this. DGI is Digital Globe Inc. I had a question in the den. It's at 29.25. It's in a consolidation pattern. It needs to break out above the last peak to really show that it's got continuing strength. Right now, I think it's about to consolidate for a little bit. The doji candle from last week, it says that the parameters are clear. I wouldn't be surprised if it pulls back to about 27 over the next week or so. The other question I had was LNG. LNG is Cheniere Energy. I've got it at a leg E right now, probably making a peak E. I haven't got all those down arrows notated. I'll just put them in right there. And it's in leg E in the weekly chart, but it's only leg C in the monthly. So if you're along this, hold it as a core position. What I would do is I'd expect that it's going to come back. If there's that oval pattern, always look for those oval patterns. I haven't got time to do this, what I wanted to do. So that oval pattern says at some point in the next couple of weeks, it could come back. It's a 21.57. It could put it back to 20.50. It could even hit 19.30. But the strength, the overall strength right now, 1955 is a 9-period moving average support in the weekly chart. Strength is to the upside, but it's getting a little overbought, and it could consolidate just for a little bit. Now, let me do this. I've got just a moment here. I wanted to show this chart. I don't normally want to show charts that my subscribers are in, but I had a question. Would you please show us and explain to us what you do? Well, this morning in my newsletter, what I'd done, if I can just find it here, I had shown this chart right there. There's RAD. It's Rite Aid. Trading at $1.06. It was actually closed at $1.56 yesterday. And I showed the pattern. I showed the left side, the right side price time match. I showed the right angle, the inside wedge target area. And I spoke about this. And in my comments, I had said that if it's able to be to show some strength here, it could go to 167 or 1.70s by early next week. Here is the chart live. This is the chart right now. Where did it go to this morning? We're in at $1.38. It gave a 27% profit. Sometime this morning it could turn around. But the point is, there's that trend line. It hit it exactly right there. So it's in leg E. It's a little overbought now. It could pull back. But that's the kind of technical analysis I like to give. Here's the up channel in the weekly. And so if you're interested in my newsletter, it's called The Opening Call. Get a 2-week free subscription. Go to the front page of TFN. I'd love to hear from you. I'd love for you to check it out. 2 weeks free, opening call. And I'll be back on Monday. Have a fantastic weekend. Stay tuned for Nico.
Are you looking for